All right, and welcome everybody to the October 2021 Investing in Identity Forum. I am your host, Travis Dre, founder and CEO of Liminal. A little bit about Liminal. We're a boutique strategy advisory firm focused on digital identity, fintech, and cybersecurity, and we support a handful of teams, typically executives, corporate strategy, M&A teams, private equity. So if any of this is interesting to you guys today, always happy to hop on a call and chat more about anything we discuss here or anything that's top of mind to you guys. Really quickly, what we do a couple of things really well. We do market intelligence, product design, go-to-market, and M&A and transaction services. So let's go ahead and jump right into it. So this month, we're going to cover onboarding as a service later on in today's discussion. But before we get there, I want to go ahead and introduce our other panelists today. Well, actually, normally we have Dave Fields joining us, but unfortunately he is out this month. We are joined by myself and Cameron D'Ambrosi, Managing Director here at Liminal. Cameron, welcome.
Thank you for having me.
Yeah,
excited to be here as always.
Yeah. And if you guys really like Cameron, you can listen to his podcast, State of Identity podcast on Spotify or wherever you get your podcasts. We don't do enough of your State of Identity promotion on here.
Well, plug away.
Plug away, yeah.
Plugs are free, as they say.
All right. Well, let's go ahead and jump right into it. So we're going to go ahead and kick off with some of the notable deals in October. So just to kind of kick it off, Alloy was actually at the end of September. So if you guys joined us in the September show, we didn't really cover it. However, we do believe that this is worth making sure we do cover. So Alloy taking in $100 million at $1.35 billion valuation. We love this play. I think it really kind of resonates very strong with how much orchestration now means to this industry. We are seeing this pivot from vertical to horizontal solutions. Again, something we've covered previously in other episodes of the Investing Identity Forum. This money is going to go pretty far for these guys and also makes them a real competitive threat to pretty much every vendor out there. So this is a really great bet for these guys. And we'll come back to their position on the landscape here in a minute, and we'll open it up to Cameron then. Next is FrankieOne taking in $16 million. Now, we actually really like this. The whole kind of concept here is a single API. So if you guys aren't familiar with FrankieOne, I believe they're Australian. Is that right, Cameron?
Yes.
Yeah, so they're out of Australia. So if you're here in the US and you're dialing in, you might not have already heard about them, but this is one that we expect to see more of. They've taken on some pretty good investors here. Again, we'll dive deeper into that in a second. Orca Security, $550 million. This company is not that old. Started in 2019, already kind of crushing it. I believe they're at like 800% growth or 900% growth, something pretty wild, but obviously seeing a ton of success there. And then lastly is Gretel taking in $50 million for synthetic and privacy preserving data, an area that I personally find extremely interesting. Laszlo Bock from Google is one of their co-founders. I think this is a company that has some pretty strong strengths and also some really interesting products that we'll dive into shortly. In terms of the notable M&A, there was a bit of M&A activity this month, but I think most notably was the OneIdentity, OneLogin acquisition here. OneIdentity, I mean, we know Quest has been at it for a while in terms of, hey, let's make OneIdentity this real true power player. So this acquisition makes a ton of sense for these guys, really puts them into kind of the main conversation around, as you can see here, Okta and Ping, and ForgeRock in the IAM space. Second is Dataminer acquiring the crisis management company Crizo. Is it Crizo or Crizo?
I've been saying Crizo because it's fun to say Crizo.
It is fun. It is fun. But, I think this is really interesting in terms of, you have a company that does a very good job at identifying crisis, and now they're going to help you manage it. Makes kind of sense, right? And kind of one of those shifts that we typically see here as technology firms start to mature a little bit, that they do acquire some form of consulting or professional services. And then last is Foxit acquiring eSignGenie. Kind of an interesting acquisition here. Foxit, Chinese-based company, losing quite a bit of their share price and some of their revenues slipping this past year. However, this really puts them into a strong competition with companies like Adobe and others that are offering some of the very similar types of services. So let's go ahead and open it up. And as you guys can see here, we're going to go ahead and landscape this. This will be maybe not the last time you see this landscape, but definitely one of the last times, as we are about to release a new landscape in the end of November. So stay tuned for that. But let's continue to use this one here. So this is where Alloy's position is on the map. You can kind of see them at the regulatory compliance, the KYC, entity verification, IDV, and fraud prevention side of things. Cameron, I know you know Alloy quite well. What are your thoughts on Alloy? How does this money kind of support them, and where do we see them kind of expanding into the other areas of the landscape?
Yeah, I mean, I think we already saw it with their latest announcement that they've just added credit decisioning into the platform as well. So you can already see that they are continuing to, gobble up adjacent market segments, again, in furtherance of this notion that, when you are an Alloy customer, your core competency is meeting the needs of your customer around their financial services. And Alloy can really bring the benefits of their network and the full depth and breadth of the data that they have access to mitigate the onboarding risk, the fraud risk, and now some of this credit risk as well. Taking that same approach they took with their initial product launch in the identity space to bring credit attributes into the fold. I think it makes a lot of sense. And I think you're going to continue to see them moving into some of these adjacent segments. If I were a gambling man, which fortunately for my bookie, I am, I think user and entity behavior analytics, other signals where not just at the time of account opening, but now on an ongoing basis, how customers are continuing to move their accounts or move through that customer journey is going to be a place you're going to continue to see Alloy looking to penetrate, again, taking a lot of the strength of that network they have built up and bringing that to bear for their customers, letting their customers really focus on what they do best.
Yeah, and I think that's a really great point. I think looking at this map here with Alloy, right, orchestration player, we did a whole deep dive on orchestration, so we won't belabor the point. But for those of you that haven't already watched that episode, the concept here is, how do we support customers going through the entire customer lifecycle from first engagement all the way through ongoing engagement? That includes things like onboarding, authentication, authorization, transaction monitoring, et cetera. So, I think Alloy here, obviously moving into the credit decisioning, one of their biggest partners is SecureKey. So with this announcement, clearly a little bit of a show there in terms of where SecureKey might be headed with everything. So, something probably we'll be talking about here on a future episode. All right, Orca Security. So, obviously we don't get to talk too much about what's happening in the cybersecurity top part of our landscape, but there is actually quite a bit of action right now that's happening. Orca taking in the $550 million. Who's Orca, Cameron? And then, what does this money actually mean for these guys?
Yeah, so Orca is a really interesting platform that does, agentless cybersecurity across your cloud footprint, as it were. And I think this really sits at this trend that we have been continuing to call out with the landscape, which is this notion that this kind of trifecta here of privileged access management, identity governance and administration, workforce IAM, continuing to converge from both kind of a cybersecurity perspective as well as kind of an operational administrative perspective within organizations. You can really boil down this fusion of these segments into the key question of, who are you within an organization and what should you be able to do? And if you can't understand that, then you can't really provide for, the cybersecurity needs, because if you don't know, who has access to what, then detecting what's abnormal obviously becomes impossible. So I think you're going to continue to see investments, acquisitions in this space that are bringing these core functions together under one organizational purview, because the footprint, whether you're talking multi-cloud, whether you're talking hybrid approach, the attack surface is just so large that it becomes almost impossible to protect your organization unless you can have full visibility of, what identities are doing what within your infrastructure. I think we can expect to see Orca take this money and continue looking to try and offer as much functionality as possible in these core areas, because that's the only way forward. We really expect to see this consolidation continue over time.
Yeah, that's a good point. I think the one thing they did call out was the big push into IAM. So I'm sure we'll start to see, we could probably spread some of these dots out a little bit more, but as your point, there's a very large overlap in how they do this. And so as we look forward, we'll probably revisit Orca in the future, and they'll probably have a fair part of this top landscape really kind of canvassed. But let's keep moving on here. FrankieOne, just kind of fun to say, so FrankieOne kind of coming out of nowhere. The raise isn't extremely large, given that we're talking about hundreds of millions of dollars every month on this webinar. But $60 million is a lot of money, and it's especially a lot of money for a young company. It's still not super unusual to see $10-15 million rounds being quite meaningful. So, when I see $16 million, especially from the investors that they were able to kind of get here, this is a platform that makes a lot of sense, right? The founders kind of took approach where they're trying to create a neobank. I think we've heard this story a few times now. Hey, customer onboarding sucks. How do we build, let's not create a bank yet. Let's actually go figure out how to solve this onboarding challenge that we're facing currently. And they ended up deciding to build a single API, basically IDV flow, right? So looking back at it, they're a bit of an orchestration vendor. Want to kind of dig more into the technology here, but some of the things that they definitely attribute themselves to is the KYC, the IDV, the fraud prevention, the biometrics, and they're adding transaction monitoring in their stack currently. That is something that they're actively building out. So, maybe we'll be adding that blue dot there to the regulatory compliance transaction monitoring component. Cameron, what are your thoughts on FrankieOne, and where do you kind of see these guys headed next?
Yeah, I think very similar to Alloy. They're sitting in between these financial services, fintech platforms, BNPL platforms, and the customers who are coming on and saying, look, you should focus on your core competency and leave this onboarding and initial kind of risk decisioning to us. I think it makes a ton of sense. I think you can look at the segments that Alloy is looking to move into and assume that FrankieOne is going to follow that same path. When you think about this consumer life cycle as a horizontal, all of those areas where you can potentially continue rolling functionality in, alternative credit and financial identity, regulatory compliance, and transaction monitoring, I think are the areas that you can expect them to continue pushing, maybe something along the lines of an identity proofing again, pushing out portable identities in some way that users can leverage this identity they've created within the FrankieOne platform to further effect, also maybe a possibility. I think Alloy has proven the model, they've proven the approach with the tremendous success they've seen. And I think FrankieOne, coming at it from a different geography, targeting some different customers that maybe Alloy geographically hasn't had a chance to reach out to yet. And it's a recipe for success.
Yeah, absolutely. I think this is one that we're going to be hearing more about in the future. No doubt about it. Also, didn't they have some DJs invest?
The DJs, the chain smokers investors, also r/Wall Street Bets favorite Vlad from Robinhood, also on the cap table there. A few other folks, I believe, some executives from Monzo. Again, if you look at that through line, the chain smokers aside, fintechs, online brokerages, again, companies that if they can offload this major pain point for themselves and really focus on what they want to do, it's a win for everyone. And, a rising tide can lift all ships in the sense that you have these collaborative networks that can share intelligence around who good customers are, just as much as who bad customers are. I think when it comes to fraud, we continue getting hung up to some degree on this is about, kicking bad actors, detecting bad actors, stopping bad guys. Well, across any platform, a majority of your customers are going to be good customers. If they're not, you probably didn't have a viable platform to begin with. And I think the growth of the FrankieOnes, the Alloys of the world, really goes to show you that it is just as much about providing an elegant, low friction user experience for those good customers as much as it is, kicking the bad guys out.
Yeah. Well, yeah. And I believe, by the way, the chain smokers, I believe, are VCs now, by the way. I think it's like their progression. So yeah, nice. All right. Gretel, very interesting company here. We've looked at the synthetic data guys for a while now, just because it's a very interesting space. You can train models on it. This is one of the larger rounds that we've seen in this type of space, 50 million bucks for the company, focusing on the privacy preserving data side of things. I think what's most interesting here is the words privacy preserving data when we're talking about this, putting that into the actual announcement itself, kind of leaning into the concept of privacy around data sets versus just, hey, we're building synthetic data, right? So I think that's what's really interesting to me with this announcement. Obviously, Laszlo from formerly of Google, right? He wrote Work Rules, which is mandatory reading if you're at Google, or at least it was at some point. So I think this is really interesting. We put them in master data management simply because I don't know where best to put them, but we're going to go ahead and plop them down there. So if you are a landscape enthusiast and you're looking at this and saying, what the hell, why is it an MDMs? We understand, we're going to go ahead and put that there for now. Really interesting company here. Cameron, what are your thoughts on Gretel, and what does this kind of tell you for kind of the future of data?
I think it is reflective of this current, whether you want to call it a push-pull or like a seesaw that we're on, right? You have all these organizations that are looking to meet mandates for a better level of customer experience, more inclusion, and applying AI to these challenges that they're facing organizationally, while at the same time, whether it is from a pure risk perspective, whether it is from a regulatory perspective, or whether it is from a consumer consent perspective, getting, keeping, storing, and working with the data required to solve these challenges is becoming increasingly more challenging. And I think using this type of synthetic data makes a ton of sense, and it is the way forward to balance these competing mandates, which is, we want to train AI to have it make things better, but at the same time, storing enough data to make that training effective is a risk that is too big to bear, or has been, shut down completely from a regulatory perspective. And whether it is kind of traditional data elements like this, more normal, if you will, identity data elements, or even faces for training biometric matching algorithms, we're seeing artificially generated, synthetic data really making an impact. And I think you're going to continue seeing this trend because globally, the risks, whether again from a regulatory or otherwise, of holding real data to work with for your AI models are going to become too high. So I think synthetic data is going to really take over most of this market sooner rather than later.
That's a good point. So let's look at the full landscape here. This is where we saw the financing coming on. Now, there were some other bigger deals here. Standard Chartered taking on, investing 500 million bucks into Dataminer that's the Advanced Intelligence Group. So it's the advanced AI guys, the other part of their business. And so 500 million bucks coming from Standard Chartered over there was pretty phenomenal. Black Kite taking in 22 million bucks, the cyber risk company. The Israeli cybersecurity firm Wiz taking on 250 million bucks. Memgraph 9.3 million bucks, which is a graph database company, something that we're really familiar with here because obviously our link database is all graph. And then the other one, which is not a acquisition, we have been corrected on this, definitely not 100% not an acquisition. This is Interac acquiring the exclusive rights to SecureKey's digital identity services in Canada. I think we've gotten, our fair share of 30 or 40, maybe 50 inquiries about what this means for identity networks globally and how SecureKey is positioning themselves and how Interac is positioning themselves and how does this look. And I think that is a deal that, if I think we've definitely have beat that drum quite a bit, and so we didn't cover it on this session. But generally speaking, we think the SecureKey rights deal to Interac is actually a very interesting deal. It shakes things up. It immediately puts SecureKey back in kind of this driver's seat in terms of identity networks, and something that we see more countries at scale very interested in deploying. Right, so I think that this is a great move for SecureKey. They have solid revenue from it. They continue to own the IP. There's no IP rights transferred here, and it allows them to basically, as a service, go create digital identity networks at scale that they've proven out, right? There's not many identity networks out there that have already proven it out like SecureKey. So I think this really kind of bumps their right to win in the space, and something that I'm sure we're going to see a flood of press releases about just as they continue to march down the field over the next 2 years, 3 years. All right, I'm going to keep moving us around here. So we are now moving into the M&A side of it. This is the One Identity, One Login. You can see there in the lighter green, those are the One Identity kind of key solution segments, and then the One Login solution segments in the darker green. I think this is a great acquisition for One Identity. Again, Quest, hungry to kind of make things work, be a main player. I think this acquisition immediately enables them to do that. And so OneLogin, great business, great company. We've been fans for a long time. I think that the brand of OneLogin is very strong, but One Identity also has a strong brand, so I don't see that that's going to be an issue. Obviously, we were One World Identity before, so I'm sure hopefully we'll stop getting some of One Identity's mail, which if you're watching this and you don't know the difference, we are not the same company, so please stop sending us their mail. But generally, this is a really great investment. I think this is a solid positioning for both companies, and it puts One Identity into a driver's seat here of competing directly with a lot of the IAM players, to which, of course, as you guys have heard before from this, both Cameron and I do believe that IAM are the natural winners of the war, right? We're seeing small battles being played out right now, but the IAM players are really well positioned, especially those that are taking care of that middle bucket there, that customer IAM piece. But Cameron, what are your thoughts on this One Identity, One Login acquisition? Yeah.
I mean, I think it goes back to some of my earlier comments around Orca, right? I mean, look at how these dots are positioned. I think the trend line is very obvious that you see this anchor around IAM and adjacent segments really serving as the center of gravity of this newly combined company, bringing together this kind of privileged and IGA into workforce, and then with critical intersectionality with the customer side of IAM, and then the ongoing, mobile identity, device intelligence, and authentication pieces to kind of pull that into a holistic solution. And I think, although it looks a little disparate here, endpoint again fits very rightly in with that. It's all about understanding, okay, who are you? What should you have access to? And what is that linkage between you and the devices you're using for that access? And we think the winners in this space are going to be able to answer that question, in as few words as possible by saying, it's my one platform. It does this all. Don't worry about it. And we can sit on top of all of these different areas, and you can see, everything coming out of your systems, manage them from a single point, which is going to, one, make your life easier, and two, obviously improve your cybersecurity posture, because you're going to have a closer hold on, who exactly is doing what and why.
Yeah, and you mentioned the congruency here with e-signatures kind of in the middle there. In our new landscape, that is one that did shift quite dramatically back down to our 2019 positioning. So that was kind of lower in the map. So, as we start to see these platforms evolve and where features start to overlap a little bit more, some of these do move. And I think the story with this acquisition continues to make more sense as we look at the newer landscape. And again, you guys will have to save that anticipation and build that anticipation up for the end of November. So moving forward, Dataminer. So, Dataminer, interesting company here, not necessarily on our landscape. We decided to kind of put it in this kind of off section here between network and endpoint security, mostly for the fact that they identify risks, right? They kind of sound the alarm. They're constantly monitoring. They're protecting the entire cybersecurity stack. And the idea that the reason why we really wanted to cover this acquisition is because they picked up a crisis management firm. Again, as I mentioned before earlier, the fact that they identified crisis, they identify issues, they obviously want to continue supporting their customers post identification, right? So bringing on Crizo as that crisis management firm to provide professional services is a natural extension. To me, this is a clear sign of maturing in the market, right? We're starting to bring on not just the technical or the software components, but also the additional professional services side of it. So I think it's a signal, right? And that's what all of this is all about. Enough signals can tell us where those better investments are to be had. Cameron, what are your thoughts on this acquisition?
Yeah, I think you hit the nail on the head there. It only seeks to reinforce Dataminer's position of kind of detecting the ripples that stem from a security incident with capabilities that can lead organizations to kind of recover from that breach. So, similar to what we've talked about with Alloy and these other platforms looking to move horizontally kind of across that life cycle, I think that's a similar trend you can call it here. Dataminer is going to help you be the tip of the spear for understanding when you have been breached, and Crizo, apologies to anyone from their team who's listening to us repeatedly say the name of the company wrong, is going to help you recover from that aftermath. So I think it makes a ton of sense.
Yeah, Crizo. Yeah, if someone knows,
let's
please
just call the whole
know.
thing off.
Yeah, just. All right. Yeah, moving on. The next one here is Foxit with eSign Genie. Interesting acquisition here. Not one that we would probably normally cover. I think what's quite interesting with this one is Foxit being the Chinese-based company acquiring eSign Genie, and then making this really a very strong competitive product suite to Adobe, right? As we've looked at in the market here now for some time, a lot of the PDF companies or companies doing kind of the doc management with e-signature have a pretty interesting right to win across several different areas, especially with IDaaS or eIDaaS out in Europe, and how they can kind of help support some of those e-signature needs. So this is just an area that we don't get to see much in terms of activity. And so we wanted to kind of highlight it as, hey, look, there's something we don't see often. Maybe this is a signal for other players in the market to start to bolt on some of these other capabilities into their stack. I don't know, Cameron, if you have anything else to add for this acquisition.
No, just I think another, again, hearkening back to this trend of companies looking to, we're calling it a horizontal, but I guess in the standard business lingo, you'd call it vertical integration, right? Looking to own the entirety of this life cycle, from the creation of a secure PDF contract and its encryption all the way through its signing and ongoing kind of contract lifecycle management. I think, this is on the heels of a previous partnership that they had struck up to kind of enable these secure signature functionalities within the Foxit platform. So I think it makes a tremendous amount of sense that Foxit said, look, we like what we saw with this integration and we want to own the whole thing and continue hoping to own, again, more touch points across the entirety of that document lifecycle, which, mirrors very closely the consumer digital identity lifecycle when you talk about kind of non-e-signature related transactions. Very similar use cases there. And I think it makes a ton of sense to have that be as closely integrated as possible to provide the best possible user experience, as well as the highest level of assurance of those underlying signatures.
Yeah, good. Well put. All right. So where you can see all of the acquisitions that we were covering. So there's all the M&A activity up here on the landscape, kind of covering the whole kind of top area of our landscape. So very unusual for us, right? Typically, we're seeing this at the bottom of the landscape or on the right side of the landscape. So seeing a lot of activity up in the cybersecurity. We expect this to continue going on, right? So if you guys tuned in for our last episode, we went through some of our predictions over the course of the year and where we started to see things. One of those predictions that we made is that we see a lot of these cybersecurity markets start to consolidate and continue to further consolidate. So, we're not cherry picking these M&As to kind of prove our point, but I think that you're starting to see some of those predictions come true. And then here you can see just let's layering on where all of the different kind of financing plus M&A activity has occurred. So starting to see that money kind of pour into your more digital identity centric solution segments, your IDVs, your fraud prevention, et cetera. And then our acquisitions staying up north in this landscape with the cybersecurity side of things. Pretty interesting trend that we are seeing here. This is not super unique to this month in terms of how this would look, and we'll cover those trends in December when we do cover our kind of 2021 financing look back. If you guys are interested in where we are in terms of financing and where those deals are mostly happening, you can go ahead and check out our last episode where Will Charnley from our advisory team walked us through what we're starting to see out in the market over the last 9 months. All right. And so let's go ahead and move to, so we are skipping a section this week. So we are skipping our main conversation section because we wanted to spend more time on the deals as well as to talk about kind of our field of dreams, this prediction. Because for the first time ever, Cameron and I actually came to the conclusion separately that we wanted to cover the same topic. So we figured we'd have a kind of an open dialogue, open conversation about it. And again, we welcome everybody who is joining us here and interested in this topic to reach out to us directly. We'd love to have those conversations. All right. So let's got to get Dave. There we go. All right. So it's just the two of us here. Cameron, this time our October prediction. We're predicting this shift towards onboarding as a service. So what the hell is onboarding as a service?
I think it's best summed up, in the same way we've been talking about these trends in the context of the market landscape, which is platforms like the Alloys, like the FrankieOnes of the world that are going to their customers and saying, your core competency is not evaluating the realness or personhood or fraud risk of the person who is coming through their mobile phone app or your website to get onto your platform. Your core competency is protecting their assets, making investment recommendations for them, facilitating the conversion of fiat currency to cryptocurrency, whatever it may be, and leave this decisioning to us, specifically because of the tremendous flywheel effect you get from sitting on top of onboarding events across platforms, right? Even if you are, I don't know, the most dominant retail bank in the country, which I believe, by the numbers is JP Morgan Chase, the amount of identities that they see on a daily or even yearly basis pales in comparison to the identities that a platform like a Secure can see that is inside not only one bank, but 5, 10, 15, 20 of their peers. And I think for a while, you maybe saw, I think, concerns about handing over what was previously seen as kind of this critical juncture, the first contact you were making with a customer to a third-party vendor. I think that was what precluded the rise of onboarding as a service previously. And I think there were a couple companies like Secure, for example, like Threat Metrics, that really started breaking that mold. I think you could put almost Sift in that bucket as well, which is, look, we are going to ask you to share what you previously closely held as proprietary data with our network, but in exchange, you are going to get the strength of, running as a herd as opposed to being a single wildebeest, out on the African Sahara, right? And we've started seeing those tremendous results, whether, again, it's the Secures, the Sifts, the Threat Metrics, the Emailages of the world. The network effect is real. I think it's a major trend that you've seen, across industries when it comes to, things like Uber or other platforms where, again, you're kind of distributing resources, right? And executives are taking note, and I think they're finally recognizing we are going to get strong benefits from doing this, and it is not sharing this data with these platforms, obviously in a trusted way, is not exposing us to vulnerability. It's actually making us all stronger and opening up areas of competition where we really see that we can differentiate ourselves, whether it's pricing, whether it's customer experience, whether it's, I don't know, your AI recommendations for your stock portfolio, whatever that may be. This area of evaluating the risk of the customer initially is something that they can more effectively outsource. I think this notion is a trend that you see across all areas, whether it's identity and access management or others. Again, I could build my own. I could use my engineering resources to do this myself, but it makes a lot more sense to leave this to the experts and gain some of these tremendous network effects in return.
No, and I think that's, just going to add on to that, because I think that it's really well said there. This has been the trend that we have been seeing, right? And so again, kind of going back to why did we change our name from One World Identity to Liminal? It has a lot to do with the fact that digital identity is changing. Identity is changing away from the concept of identity being a thing and more about being a why and a how, right? And so when we start to think about these, we're actually thinking about it in terms of use cases. So here we have onboarding as a service being the main use case that we're solving for. And so there does seem to be a lot of power behind focusing on use case solutions versus technology vertical solutions. And so that's really what we've been seeing, and something that's been just kind of in process now for 2 or 3 years. And we're starting to see these big rounds, these big financings, these really wild growth rates starting to happen as more companies are successful at this onboarding as a service component. And so with that, we are seeing these larger companies raise that money. And as they begin to focus on being the onboarding as a service player, right? You can think about Alloy. We talked about them earlier today, right? Once they are starting to think about it, they're starting to seed some of the areas that they perhaps could have been or would have been focused on in a non-boom market. And so these are leaving little opportunities for small specific vertical capabilities. And so there's companies out there that are really focused on building out these capabilities. They're going to find a nice niche for themselves, right? They're going to find some pretty good business opportunities for themselves. And it's not too dissimilar to the data aggregators, right? I think about Global Data Consortium, right? They built a strong niche for themselves. And then as soon as the market opened up a little bit more, they were able to produce a really great product as a result of being in the right position and having the best vertical capability at the time. And, they still do. So I think looking at this ahead, we're going to see not just these large companies move to onboarding as a service, but also a lot of opportunities for companies that don't move to onboarding as a service and focus on their niche capabilities. The other thing I think is going to be really interesting for this is a lot of these companies just raised a ton of money. Onboarding as a service is a very broad concept, right? We're talking about entire life cycle here. We're going to see a lot more acquisitions to fill those gaps, right? So it's going to be a lot less build and a lot more buy. And so the companies that have stronger corp dev teams, and this is where I'm really looking at private equity, and I'm looking at the strength of the investors, right? We're seeing who has the strategic investors on board currently to be able to help them navigate these very tough corp dev challenges. And I think the folks with the best corporate strategy are really going to actually win this next piece, which is going to be direct head-to-head with the IAM service providers. We already are starting to see the consolidation happening in the mature market with IAM. They're going to continue to grab more of the customer side of it versus the workforce side of it. And so as they continue to work towards this customer IAM solution set, we're going to continue to see them take bites, nibbles for now, but bites out of this onboarding as a service community. And over time, that's going to be pretty significant. So it's a long roundabout saying of this seems to make a lot of sense in terms of where we're headed. This seems to make a lot of sense in terms of these companies that are really well positioned that just took a lot of money on board are now going to start to fill those gaps. And we're starting to see those companies with the best financing and corp strategy teams to be very successful. And it also seems that these companies are going to go head to head in the future. So maybe a Alloy versus Okta showdown in a few years. We'll find out. And then, of course, those companies that are really focused on their certain capabilities are going to find a lot of value being created, right? And we call these are golden cogs, right? And we'll, so if you guys are unfamiliar with our notion of a golden cog strategy, the basic kind of premise is that these are strong enabler solutions that can be both platforms or enablers, but choose oftentimes to remain as an enabler because of the pricing power that they currently have or other forms of an economic moat. And so right now we're going to start seeing a lot of golden cogs minted out of this next progression in the market. So I think it's a super, super interesting time if you're an investor or if you're an executive trying to kind of figure out what the next play is, right? So I don't know, Cameron, are you seeing anything that's kind of, other than we've already talked about, are you seeing anything that kind of, for our audience here that would kind of tip them around or, have them think about things differently?
That's a great question. No, I mean, to some degree, it feels as if we are the dog that caught the car. Like we've been beating this drum for like 5-6 years now, and it's all coming together. And it's like, well, shoot, like I guess we were right, and not sure where we go from here to some degree. I think. Look, it's a continuing journey. I think we're only in the beginning stages of this identity-centric thinking kind of penetrating across industries. And I think when it comes to applicability, we've still really only reached the first inning of where digital identity can have an impact. When you are thinking about how organizations outside of regulated industries are thinking about identity, they have not had to really commit to addressing some of these core challenges. And I think you're about to start to see that changing. Age verification in particular is an area that I think is going to get a tremendous amount of attention. And I think it's going to be very similar to GDPR in the sense that for organizations that have not already been putting a plan forth, it's going to feel like an insurmountable challenge that came out of nowhere with deadlines that they think are, very, very challenging to meet. And I think this goes to, some of the chat we had around the notion of synthetic data. When you think about age verification in the context of identity and some of these regulations for protecting children that are coming down the pike in a bunch of jurisdictions, you're being told simultaneously, children cannot have their data collected and you can't collect certain information from children. But at the same time, you need to query your users to understand if they're a child or not. So it's somewhat of a chicken egg problem there. And I think you're about to see a ton of businesses caring about digital identity because of this challenge that, heretofore had not thought about it. When I think about the trajectory that we were on with One World Identity and now Liminal, in many cases, you saw us, starting with the very directly regulated businesses, the banks, the fintechs, folks who had, obligations under the USA Patriot and Bank Secrecy Acts to know their customer, or they would get fined or have their charters revoked. Then you saw trust and safety type applications, online to offline platforms, places where you needed to have digital identity in your stack because of the trust and safety element and the fact that you had an existential threat to your business if you didn't adopt digital identity. And now I think this next wave, which is any platform that is dealing with customers, collecting data, allowing users to interact, they have been able to skate by kind of allowing people who are under a certain threshold age get by with a nudge and a wink, click this box if you're over 13. Well, obviously, if you're a kid and you want to get on TikTok to watch the videos you want to watch, you have no incentive to not check that box. So we are about to see a whole new wave of companies that previously had kind of not cared about digital identity get thrown into the deep end of the pool. And I think it's going to be really exciting to see what happens next.
Yeah. Well, with that, I don't think I can add anything more. You mentioned a few things that I won't mention. It's about this, but you did mention a few things. One is consumer digital identity, and the second thing is age assurance. We've recently published 2 research reports on these topics. So if these are interesting topics to you guys, go to our website, liminal.co. Check it out. We have 2 really great research reports with some really interesting proprietary data and information kind of pulled out from there. I think our age assurance side of things, we may be a little too early in the topic, but definitely not too early in terms of solving this problem. Worth reading these research reports, worth checking them out. And also with that, we have some more upcoming webinars. We're going to continue with the Investing in Identity series. So if you want to check those out, they will be in the middle of the month. So we actually won't have a full month between now and our November version of this. And then also we have the thesis, which is with our Director of Research, Nick Holland. So if you want to check those out as well, you go to our website or on our YouTube page, you can check all of those videos out. And of course, want to kind of give Cameron's podcast some love, the leading digital identity podcast, State of Identity. Join over 5,000 listeners in that podcast. We cover all sorts of different topics, but I think what's really interesting, the reason why I listen to it, and not to blow smoke up Cameron's ass right now, but is because if I want to hear about a company, or if I want to learn about a specific company in the space, I know that I can go there and I can hear from the CEO directly for 30 minutes, 45 minutes about why their company does what they do and how they're solving the problem differently. And that's just something that you're never going to be able to get. Even if you meet that person, it's a very kind of masks off approach to kind of understanding what's happening in the market. So if you guys are interested in that, please do check that out, as well as the ongoing research that we have. And we'll see you back here in November, likely joined by our good buddy Dave Fields.